Thank you, Chair. Maybe the CEC in charge of finance probably could point to this committee to help this committee actually solve this matter from their financials, because there is that section where it is showing the accounts that they have and the balances that are in those accounts. Can they point out that this retention money is in this account and it is in the financials? I think that one would help this committee to make a determination.
Yeah, because we just want to confirm the money is there. But the OAG does not seem to have that assurance.
Chair, we are very confident that the money is in the bank. The money is there.
Point us to it. Just point us to it. Remember, we said we are not doing the audit today. So ideally, we should have gone with the position of the OAG and perhaps asked EACC now to do the investigation. So just before we make that recommendation, try to convince us why this matter should not be a matter for investigation.
1 minute, Chair.
This is 104 million, money that does not belong to you. It belongs to contractors and service providers.
I'll have you talk. Chair, it's being pointed out here to me, but if it's okay, come here. Just talk. Explain it.
You will need to introduce yourself for answered purposes.
Thank you, Chair. Through Excellency the Governor, my name is CPA James Katiwa. The difference that we are talking of, 104 million, is actually the difference between the open balance and the closing balance in that account. When you talk of the cash flow, it's actually the movement. During the year, there were funds which were withheld, and we also released funds to the contractors. The reason why we wrote to the OAG is to seek clarification, because the retention money, or rather the retention account, the money that we put there basically belongs to the contractors legally, but from an economic reality, the money is in our control. The difference that is given there of 104 million is actually reflected as a cash and cash equivalent in the cash flow statement. When you talk of adjusting for that particular figure, the difficulty that we had, or the challenge, was that this particular figure or the movement has already been captured under acquisition of assets. Because once we...
CPA, you are bombarding us with jargon, which you can discuss with your professional colleagues. Can you confirm to us that 104 million as retained can be traced?
In an account.
In an account?
Yes, Chair, we can do that.
Where is that?
We have it in the certificate. It's the difference between 251 million and 146 million.
Auditor General, you have interacted, you asked this question at the time of exit management letter. Who is telling the truth? How do we know? Because last week we were bombarded with impeachment proceedings and allegations against a governor for raiding the retentions account. And we don't want the MCAs of Nakuru to do the same to Governor Kihika. So we have an opportunity to deal with it. Is that money traceable?
Chair, if it was not reported in the financial statement, it is not supported with any document like bank statement or a control ledger. It is the
and the gentleman was answering the question. What do you mean economically? It is money under your control. Might you have borrowed that money?
Yeah, because they raid it whenever there are delays in exchequer releases.
Yes.
That's a practice in
Yeah, might you have
Yes, Chair.
and
Through
so you have not
Excellency,
returned it?
what I mean by that is the account, the deposit account, is in the name of Nakuru County. But whose money is this? The money we are holding is for the suppliers. Once we deduct the money, we issue them with receipts. So the money is theirs, but it belongs to who? It is in our control, but it belongs to the contractors. So that's why, under cash accounting, that figure is captured in the statement of financial performance and acquisition of assets. This particular problem has been
Just
cured.
stop it there. Treasury?
Thank you, Chair. Probably to help this committee make a determination, I would appreciate if the officer would tell us the deposit account as XYZ amount, and we have a reconciliation of that XYZ amount is money belonging to A, B, C, D. That one will settle the matter.
That's what we've been trying to ask. Then we are getting a lecture on accounting. Governor, after all that lecture, are you able to respond to that question?
Yes, Chair. Like I said, I feel confident the money is there, but maybe you can.
No, just
give
as
us
the
time
treasurer
to answer
said,
that.
just
Yes.
show us this is the account, this is the money, this is how it flowed in. The accounting treatment is secondary.
Sure.
For us is the traceability and accountability for the funds.
Sure.
And I believe that you'd also be asking the same of your officers.
Sure. So
Do you feel like you have a sufficient explanation from the officers? And if you do, then because you speak our language, you're a fellow politician, a former senator. Can you digest that and just give us a response that we can understand? By showing us here is the money, page 19, here are the payments, page 27, and here is the balance, page 29.
From what was submitted, this was submitted to the Office of the Auditor General. We have the account number. This is our retention account at the Central Bank of Kenya. Account 100.
On which page is that?
Sorry,
The next
page 44. Oh, sorry. This is the one for the Auditor General.
Yes?
Yes, the certificates. Yes. So do the senators have that? you mind if I just-
we must make progress on this. We have two options because it looks like it does not matter how long we take on this because your professionals are disputing the accounting treatment, but we, the politicians, are also not getting visibility on whether the 104 either exists or it was paid. We have sufficient experience of counties raiding and misusing the deposit and retentions account. We are asking the Auditor General, please do a thorough audit of deposits and retentions account in Nakuru County. And on the basis of your report, we will take a view on whether to escalate the issues to the EACC. So you can deal with it in the substantive audit. I don't know whether that's fair enough.
It's fine, Chair.
Okay.
Sure.
So then that matter remains unresolved. We'll be getting a proper update from the OAG. And if we find that the monkey games that are in other counties are also in Nakuru, then it will be a matter for EACC to deal with. The next matter?
Thank you, Chair, for your guidance. The next one was inaccuracy in the compensation of employees, where they have provided payroll for a whole month, and they have failed to demonstrate the variances that we were querying. So the issue is not addressed.
For avoidance of doubt, if you sum the amount as per ledger and sum the amount as per financial statements, is there a difference?
Sorry, Chair, we were not able to reconcile because we were very specific on the items, because the payroll have specific items in the votes.
No. Just from on the face of it, the total amount as per financial statements, you see it's broken down into several 1, 2, 3, 4, 5 components. If you sum up the total amount as per financial statements, you get an amount which is 6.4 billion. Yes. If you sum up the amount as per ledger, what do you get? Do you get 6.4 billion?
The ledger is giving us
Because if the total in the ledger is equal to the total in the financial statements, then now we just deal with the subcomponents. But if the two totals are different, then we have a serious problem.
the two totals. Give us just a moment. We reconcile the
From the county, is there total amount as per ledger equal to total amount as per financial statements?
Yes, Chair.
Can we confirm that, OAG?
Yes, we are confirming because our query was different from what you have posted.
It's the same. It confirms.
Because we first want to establish whether they reported fully the employee cost before we go to the subcomponents.
Chair, they are different.
So,
The
Governor,
financial statement is 6 and this one is 5.
who's giving you advice? Mathematics, there cannot be two views. The total as per ledger is 5 billion.
5.8.
5.8 billion. Total as per financial statements is 6.4 billion.
Yes.
So from there, what was the accurate employee cost?
Chair, very briefly. Very briefly, Chair, let me point out to two other things here that we pointed out in our management response that add up to the 6.4. So we agree with the audit finding that the statement of receipts and payments reflects compensation of employees amount of 6,447,452,070 as disclosed in note 3 of the financial statements. The supporting ledgers as analyzed by the auditor is hereby attached, and it shows compensation of employees, and it's at the back on page 6 here, 6,289,067,854.47. The auditor has omitted 5,533,346.41 shillings and 152,850, no, is it million? 152,850,962.70 being payment in respect of employees' death gratuity and debt resolution to LAP Trust, respectfully. Evidence of which is hereby provided under Appendix 2.1. On Chair, we wish to state that there is no variance between the amount in financial statement and the amount indicated in the ledger.
Auditor General?
Chair, that is not true because the total compensation they reported was 6.4, and looking at the schedule they are provided is 6.2, which still have a variance. And again, as they have indicated that we did not include 158 in respect to the LAP Trust, they have not also not provided an extra to support the same figure of 154.
Governor?
152, sorry.
We are still dealing with the global figure before we go to the subcomponents, because the global figure must tie.
I agree, Chair. However, I mean, obviously, if some of the things are omitted, then it's never going to tie. So it's tying when everything is added up together.
And where is the verifiable breakdown of that difference between 6.2 and 6.4? That is what the auditor ought to see.
I'll have Dan answer that question.
Proceed.
The actual compensation of employees was 6.2 as analyzed. That is, we have the payroll, which was 5.7. That was IPPD. Then we had the manual payroll, which was 138. And then we had the casuals, which was 378. They all come to 6.2. On top of that, we had a debt, which we paid from the vote of the payroll. That is the money to lab trust we have indicated there, which was 152,850. That was not part of the payroll. It was a debt to lab trust, but we paid out of the vote of the payroll. Then there is what we pay as death gratuity. This is people who pass away. We pay every death 70,000. And we pay from from the vote which you have, the salary vote, because you have already died, and we give you, it is within the terms that we pay 70,000 per employee. The people who are paid total to 5.5.
Done. Yes. I see there is reference to Appendix 2.1 and 2.2. Are those details there? Are those details in some appendix? Because if you are going to be the one certifying figures, then you need to take an oath. If you are to go with your numbers, then we will need to put you under oath. So, is there any record, evidence, tabled by the governor that supports what you're saying before us?
What I'm saying was in the evidence which we had submitted to the
Where
auditor
is
in
it? Where is
here
it?
It is not here. The appendix is not here.
But that is the issue. That is the issue, that as far as the Auditor General is concerned, your employee cost is not accurate because the ledgers do not tie with the financial statements. We have not even gone into the differences between the components. I am more interested in the global because you can deal with the global. The subcomponents can be an issue of misclassification, which we have already addressed. But the total must tie. And it can only tie where there is evidence. You cannot tell us that it was 6.2 and yet you've reported 6.4. So if you're talking of lab trust 152 million, gratuity 70,000 per death, manual payroll 138 million, casuals 378 million, where is that schedule? So that we can close the gap between 6.4 and 6.2. It is a simple thing. Where is it?
Chair, I'm also wondering, when you are preparing this schedule, all you needed is an extra column for those payments you're speaking about, the 70,000, because you have already put the manual payroll figure there. But what stopped you from adding the others so that the chair can see what you're saying?
Yeah, because you have a schedule here for 6.2, but you have reported 6.4. How do we close that gap? Page 6, here. Perhaps this is what you are reading.
I'm seeing it.
That's what you are reading.
It's a gap there.
Yes, so what the gap between 6.29 and 6.447,
447.
how do we close it?
I request the committee to give us time to submit.
So what was the accurate employee cost in Nakuru in that financial year?
The accurate employees cost was, excluding those, is 6.2.
The total cost on the total compensation of employees in that financial year. What was it?
6.294.
But you have reported in your financial statement 6.447.
Yes. And that's what we have said. There are two items which were included, which is not part of the employees' cost.
So why then post them as part of employee cost if they are not part of employee cost?
Because they drew from the vote of the employees' cost.
Why didn't you give that explanation to the auditor during the time of audit?
We did give.
Oh, but you have just said you want more time to explain. Which is which?
Provide the evidence.
Governor, how much did you spend on employees in that year? Was it 6.4 or 6.2 billion?
It is 6.4.
It is 6.4.
Correct.
But your breakdown only accounts for 6.2.
Chair,
6.29.
I'm told that previously, and I say that's why I say I'm told, previously, because we can verify, we submitted documents. Is that right? Oh, I'll have CEO Kakai explain that, about those documents that were previously submitted to you all.
I hope it answers the question rather than finding an escape route. Please proceed.
Thank you, Chair. Our employee compensation is 6.4, and this was submitted to the Senate during our response to the first audit query. And that is when you later gave us the recommendations. So it was evidence in the first submission.
If it was closed, we would have marked it as closed. The reason why it remained unresolved is because that there were queries on it. So I don't think that is sufficient justification. And in any case, the Auditor General ought to have seen it. I think it's just an issue of simple maths. Between 6.2, 6.4. Provide that evidence, provide that breakdown. Otherwise, we will be saying that you have created ghosts in Nakuru and you are paying ghosts that difference of 200 million. Auditor General, how do you advise we proceed with this? We proceed to investigations and prosecution, or it's something that you can verify?
Okay, thank you, Chair. Because when you look at, as you've guided on global view, the total cost is 6.4, and what they have given overall is 6.29. I think when we get the difference, it's narrowing down to the 152 something. So as they have requested, and because our team is already going to do the financial audit next week, we can do the reconciliation. We also look at the payroll and the actual they are talking about with your guidance.
Patrick?
Chairman, because this committee is also going to look at the payroll reports for counties, maybe the client then must be requested to do a write-up on how this issue is resolved, so that when you look at the payroll reports for Nakuru, this matter is addressed then also.
Because the danger is if we take 6.2,
Yes.
then they might be at 38%. And if it's 6.4, they would be at 40%. So if you're using some threshold, then they might fall below that threshold. So since this matter has come up where there's doubt on the accuracy of employee costs, clerk, Nakuru then must be one of those counties where we have a comprehensive conversation on the HR audit.
Noted, Chair.
So we could proceed in that manner. We had given ourselves 2:30 as time for conclusion of this exercise, but I can see we are taking much longer. Perhaps what the OAG has confirmed as unresolved, we should just pronounce ourselves on the action that should be taken to avoid a fresh audit. What is the next matter that is unresolved, that is material?
Okay, thank you, Chair. The next material issue is on unconfirmed cash and bank balance.
Okay. What was the issue?
We are querying, however, the cash book for the audit review reflected a total balance of 3.6 million, resulting to an expense variance of 339,548,665. In addition, a review of the bank reconciliation statements provided disclosed bank charges of 19 thousand that had not been recorded in the cash book as at 30th June 2024. Review of the bank reconciliation statement of the recurrent account revealed that there was at 30th June 2024 management did not provide an explanation.
I think there were broadly in three recommendations: administrative action, and then ensuring by submitting accurate and reliable reconciliations. Governor, what was the action that was taken?
Honorable Chair, all the information required by the auditors was supplied to the team of the audit. The unexplained variance of 339,538,665 was as a result of different cut-off periods, which we believe is going to be cured. Oh, I'm so sorry. So I have to start all over again. Honorable Chair, all the information required by the auditors was supplied during the time of audit. The unexplained variance of 339,508,665 was as a result of different cut-off periods, which we believe is going to be cured by transitioning to the accrual basis of accounting. Honorable Chair, there were no stale checks, but payments pending payment in the system, which were later on paid. Appendix 5.1. Thank you.
OAG, the one that sticks out is a 339 million.
Yes.
Does that explanation account for it?
No, Chair. Looking at page 154 is where they have provided the evidence, and they have only given total amount of the stale check, but there's no reconciliation for the variance of 339 that we had asked for an explanation.
I think the numbers on the stale checks are fairly low, but there is a variance of 339 million between financial statements and cash book balances. Should the two tie?
They should do a reconciliation because the bank balance may be high because you have unpresented checks. So the balance of the cash book and the bank balance should be reconciled, which they have not shown how the variance has been reconciled.
What should be the source of truth?
The source of truth should be a bank reconciliation.
So what does a layman make of this 339 million? That is it in the bank and not in the financial statements? Or it is, give us a layman interpretation.
The layman interpretation is when we are preparing financial statement, we are using the bank balance of the cash book.
Mm-hmm.
But in the bank, you may have more money. And if you have more money, you must reconcile those people who have not taken their checks to be cleared. So that one should narrow down, why am I having more money in the account, but my cash book is having less? So in that case, they may misrepresent the cash and cash equivalent, which will affect the overall performance of the financial position.
So in this case, the cash book has 3.6 billion. And the financial statement has total bank balance of 3.9 billion.
Not really, Chair. The cash book balance, the 3.6, is what is in the financial statement because of our treatment of the cash basis. But the actual bank balance is higher.
The total bank balance is 3.9 billion from your finding.
The cash book is 3.6, but the one for...
Sorry, let's agree on what's in the bank and what's in the statement.
The bank is 3.940 billion.
That is what is in the bank.
Yes, as you read statement, the first...
What is in the financial statement? What's in the cash book?
3.6. 3.6.
And cash book is really an extract from the financial statement.
The cash book is what We check with the financial
The
statement.
financial statements.
Yes.
So what is the effect where there is that variance? And don't talk of reconciliation. What to a layman, did someone steal some money between the cash book and the bank balance?
It can lead to that because this is what we are presenting as us having. But this other one in the bank, somebody can take away with it because it is not. The difference is 339.
The 1.15 are the 5 stale checks.
Oh, okay.
Yeah.
So the difference between cash book and bank
339.
balance is 339 million.
Okay. Yeah.
How do we explain that, Governor?
Chair, I think, and I know you don't want us to get into all that, part of it, because there is some things that we have paid for that have not been cashed. I think in very layman term. But I also said that that will change going forward. It's based on the cut-off dates, okay. So, but that will change, Chair, going forward because we are going to go to a different accounting system. Is that's right?
Auditor General, is this attributable to cut-off period?
Chair, no, because the financial statement is reported as at 30th June 2024. The bank statement we are reporting of the 3.9 billion is as at 30th June. The cash book is also as at 30th June. So there's no issue of cut-off in this presentation.
So Governor, you must tell us that you have 3.9 billion in the bank, but you're only reporting 3.6 billion. That is the layman's...
Chair,
yes.
First of all, it is a cut-off because I know sometimes the financial year, yes, closes end of June, but they extend for us a bit, like into July, and I'll have them explain. Because I know as council, sometimes we sit and negotiate with Treasury, and we say, hey, you guys are giving us money, like maybe May and June, it's dumped into our systems a week to the end of the financial year. So we kind of have some negotiations and they extend for us another 3 weeks. So yes, the cutoff was June 30th, but there's still more going on in the back end. But I don't want to misquote
Can they
it.
explain it
Yes.
using an extract from the bank statements? Because that's Msemakweli.
Sure.
I've had your broad explanation, but for them now is to prove it. But OAG, before then?
Chair, in a layman point, if I receive money in my bank and I'm an accountant, why don't I record it in the cash book so that the cash book can reflect what is in the bank if I've not used it? Because what we are having here, the bank was having 3.9 billion, but their cash book did not have this money. So it means it was not accounted for in the cash book, which is now giving us a balance to the financial statement. So that's where our argument is. They ought, once they receive the money in the account on 30th June, they ought to have posted it in the cash book to reflect if they had not paid anything that remained unpresented.
Treasury, before the county comes in?
Thank you, Chair. There is one document that can be able to settle this issue once and for all. And that one is called a bank reconciliation statement. It should be able to explain all that. What was the opening balance in the cash book and in the bank and how they reconcile. So if that one can be provided, honorable members of this committee, I think this committee will be able to make a determination very easily.
Yes, CEC?
For CEC, there is a statement made by the auditor saying that the difference alludes to the loss of money. Yeah? And I think from the discussion that we are having, and the governor mentioned it, there could be some payment that has not been reflected in the cash book. So is she able to establish that? Because she cannot tell us, I think like, you know, there is loss of money. She needs to establish. Now the difference is this money left here, it has not been reflected here. But if you say that there is a pointer to the loss of money, it doesn't make sense because it's a blanket, you know, kind of statement. Maybe she needs to clarify on that.
Remember, this could be the third time the auditor is saying this, because the auditor said it during the time of audit, in the interim certificate, the auditor said it in the certificate that was tabled, we said it again in our recommendations. So the burden of proof is on the county. CC, Governor says that there is something that you can explain to justify the cutoff.
Thank you, Chair. Through the Governor, I would like to point to the last financial year where the National Treasury final equitable share disbursement came after
that one the Governor has explained, and we understand that practice. Your job now is to show us that in this bank account, this is a part that came on 15th of June, totaling to 300 million, and then we close the matter.
Yes, Chair, but the other challenge is with the auditor.
No, leave the auditor alone. The Governor has given you the opportunity to explain to us how this is a cut-off issue. Please use this opportunity to explain it so that tomorrow my colleague senator or anybody else does not say that Governor Kihika stole 300 million. Left unchallenged, that would be the impression. So please give us the assurance that what we are explaining is supported by evidence.
Yes, it is supported by evidence, and the biggest challenge is that the auditors take the cut-off date as 30th of June, whereas the National Treasury and Controller of Budget and the CBK